I ran a study, this would have been somewhere in 2024. I ran a study where I basically I took the 2017 cycle, I took the 2021 cycle, I think maybe even 2019, something like that. And I took these different market cycles and it's a very crude study. I removed the 10 best days. You just like turn them to a 0. If you do that, most of the market cycle, you're like flat or down. So if you like think about your return profile, you're at break even at the end of the cycle, bull cycle, or you're actually underwater. So those 10 best days, wherever they are the thing that makes the whole cycle. In the 4 years, right? And a 4-year cycle is a whole different thing.
We
so
need
if you miss
another episode for that. Yeah.
I know that's a whole animal. So if you miss the 10 best days, and this is what like traders are trying to do, right? They're trying to get the 10 best days. And what are they trying to do? They're trying to miss the 10 worst days. So I then said, well, okay, well, let's remove the 10 worst days. And let's just say for easy math, in a cycle, you get a 10x return from the bottom. That's if you just sit the whole thing through. If you miss the 10 worst days, it goes from like a 10x to like a 20x, which is big. It's like a doubling. But you're risking the 0. You know what I mean? Like you're risking missing the 10 best days or like 2 of the 10 best days because you're trying to be cute and trade these things. And like generally speaking, the best days occur after a period of shit down, right? Leaky price. And people are like, oh man, I should get out. I should de-risk here. It's like, and then you get one green candle and then you buy back in, but you've kind of missed the thing that made the cycle happen. So again, and if you look at the stats on a daily basis, this is why traders get minced. 40% of the time, the Bitcoin price goes up or down less than 1%. On any one day, it's gone up or down less than 1%, 40% of the time. 30% of the time, it goes up more than 1%. 30% of the time, it goes down more than 1%. So if you think about that for like a levered trader who's paying a funding rate to be long, there's a 70% chance that it goes down or sideways, and you're just going to get wrecked. And then there's like a 30% chance that you're right. This is why people just get wrecked. Now, if you wind that out from rather being a daily basis, you do a quarterly basis, suddenly there's a positive skew. If you're buying over any 90-day period, Bitcoin more often than not is positive in terms of returns. And there's sometimes where you just get a quarter that's like a plus 100%, just like a plus casual doubling of your money, right? So, well, sorry, depends how you want to frame up your money, right? Some people will say, oh, it's the same Bitcoin. But,
one Bitcoin's one Bitcoin, bro.
One Bitcoin. But yeah, it's like you skew and it's like over longer time periods, Bitcoin skews positive, and folks love to compare, it was a shitty cycle because of this top and this top. And look, 4-year CAGRs, shit. Now, here's a funny thing. I wrote a piece recently called Correcting CAGR because people love their 4-year CAGR. If Bitcoin trades at 75K for the rest of the year, the CAGR is going to go from like 15% up to 45%. You know why? Because CAGR is measured from the starting point 4 years ago to the current price. What was happening 4 years ago? We were falling down that 2022 cliff. So 4-year CAGR, if we go sideways, CAGR is going to moon back to 2021 levels simply because the starting point is going from 45K all the way down to 17K, right, in June. So it's just one of those great examples of like, stop using these shitty metrics. I'm a civil engineer by trade. The amount of times I look at like the tools that TradFi uses, I'm like, you're telling me that you guys haven't worked out that that's like a Bodgy Brothers metric? Get rid of it. Use something better. It's incredible.
Can I tell you what I use, Check? So I look at the monthly chart of Bitcoin. Yep. And I saw that Bitcoin went down red 5 months in a row. And I've got my handy dandy trading view here thing right here. And then I saw that this RSI thing, which I don't totally understand because I haven't spent the time to understand it. It went from the dark red to the light red. It started going up. And so on the monthly, because I don't give a fuck about the 5-minute or the hourly or the 4-hour or the 8-hour or the 1 day or the 1 week. I literally care about the monthly. And I don't even actually care about that much because I'm literally just going to be buying. I'm not stopping DCAing either way, but I may want to set aside a little extra fiat because I think, maybe there's an opportunity for me to get some extra sats for my, for my infinitely printable Federal Reserve notes. From what I know, and you can call me on this, there was like one other time in Bitcoin's history when it went down 5 months in a row. When it went red candle 5 months in a row. That's correct, right? One other time.
There's a little bit of nuance here. So 2018, at the tail end of 2018, where we had that final sell-off down to the bottom, that was 6 consecutive red months. But importantly, the last 2 were chop solidation. The last 2 were just digesting the last one. So they were down, but like They're within the bottom formation
Yeah.
range. You can argue that 2022, we had 3 candles, 2 green, and then 3. So then there's another 6. 2015, there was another period where we had like 3, gap, 3. So very often we have like 6-ish red, really, really bad
But
monthly
5
reds.
in a row, man. Five just hammering in a row like this,
Well,
you know?
6 in a row, 5, 6 in a row. Every time we've seen this, what has been at the end of that? The price pain capitulation, the thing that put the bottom in. And it's important to note the bears are always looking for this like lower low. Generally speaking, the time pain ends with another capitulation. This is why I'm like saying, like, just be prepared. We might get another flush out, because time pain, this boredom thing, it's a real thing. And you do generally get a waterfall sell off that just everyone who's like, I just can't do this anymore. I've been sitting here for 6 months. This thing's gone absolutely no, I'm done. I'm out. So you get a really big flush out at the end, usually on a nasty waterfall sell off. Just keep that in mind. So
You're saying double down right now. Stack even harder. That's what
if we go back down below 70, don't fuck this up. Anyway, when we got and that price pain capitulation, 5, 6 red candles in a row monthly, the weekly RSI got below 30. When did we see that before? 2018 bottom, March 2020, 2022. 2022 is the only time that FTX was the only time that the price pain was lower. So a lot of folks are like, oh, we have to have another lower, a second leg lower. It's like, well, only in 2022 did that happen. So you kind of, 2, 3 times it didn't happen. That's the only time it did. Anyway, weekly RSI below 30. Every time we've seen weekly RSI below 30, price pain capitulation, 5, 6 months in a row. Every single time we see this, the bottom is usually in, with the exception of FTX, which who cares between 17.6 and 15.6? It's the same fucking number. Come on. The difference is time pain. So chop solidation. And that's why my thesis has been every time we've ever seen this amount of destruction and bearish downside and mean reversion to the downside and capitulation and realized loss and like choose your metric. Every time we've ever seen this, expect 6 or so months of chop solidation. We hammer out some kind of a floor. We have a bunch of leaky price. We get a bunch of bulls who get excited at the top, bears who get excited at the bottom. The price goes ultimately nowhere. The people who know what they're doing start accumulating. And then the market just starts going up. And you know what happens when that happens? The bears are like, nah, it's got to go lower. And I mentioned this before. There's a transition of want. The bears want it to go lower. They don't expect it to go lower, but their thesis was we're in a bull market and they only worked out that we're in a bear at 60K. They've been longing the whole way down on their futures contracts, getting liquidated every time. They finally, at 62K, realize, I should have been short this whole time, right? Oh, look, my favorite influencer is super bearish. And look, he's got this cool indicator that's predicted every single top of every single thing. It must be time to go short. And that's why they're currently paying 6.5% interest rates to be short as the market rallies and liquidates them one by one. The bears want the market to go down. They don't really have a good thesis aside from a calendar. It has to go down because it's October. They just want the 4-year cycle to be the same. They're not looking, and again, I could be very wrong, and I'll eat my words comfortably. I'm looking at the way that human beings are behaving. Are we seeing the accumulation pressures you want to see at the bottom? And the answer is yes. It literally looks like every single previous bear market floor. Now, could this one be different? Yeah, it could. Kind of dangerous words, though.
So, you know the old adage, like the sell in May and go away thing?
Yep.
Does
Yeah, it
that
could
apply
happen.
to Bitcoin?
Yeah, it has. I mean, historically it has, but like, is sell in May and go away? Is that 75K back down to 30K? Is it like another 50% decline from here? Or is that 75K goes up to 80, 85, gets rejected because we just rarely bust through that short-term cost basis the first time, which is at 80K at the moment. We sell back down, we go back to 70, 65, maybe we go and get 58K, gang a kiss. And then it goes up again. The bears get super excited. They go, yes, finally, 30K, here we come. They short the bottom. We go up to 80K again. We try again. Like, chop solidation is the most likely outcome. I think the bears are very, very wrong. I think the moon boys probably won't get their answer yet. But I think the bulls are more correct than the bears. And I would love to see the lines on charts for the bear case, because I try to construct my own all the time, because it's my job to try and be right. And I say that try and be right because that's the best we can do as people. Try and be right. I can't convince myself yet that there's any credible bear case, and certainly not in face of, I mean, just the probabilities, man. Like every single mean reversion at Q4 has been the bottom. 54K, the realized price is that Q4 event. Fundamentally, I'm like, we just shouldn't go to the realized price anymore. I'm just like, everything just lines up.